The war was far away, but its impact on India is being closely watched. After the United States carried out a major military operation in Venezuela, President Donald Trump announced the capture of Venezuelan President Nicolas Maduro. Global markets reacted instantly. But for Indians, the key question is very specific. Does this crisis affect India or not? First, India's direct connection to Venezuela. India does not have any strong trade ties with Venezuela today. In fact, due to long-standing US sanctions, India has already reduced, almost stopped, importing Venezuelan crude oil over the past few years. So, from a direct trade to diplomatic point of view, India is largely insulated. There's no immediate threat to Indians' export, Indian companies, or maybe Indian investments. That's a good news for Indians. Now comes the part that matters for most of the Indians, the oil prices. Even though India doesn't buy oil from Venezuela anymore, Venezuela matters for the global oil sentiment. It holds the world's largest proven oil reserve. Any military action involving oil-rich country automatically pushes oil prices much more higher. And India is one of the world's biggest oil importers. Yes. India imports more than 85% of the crude oil needs. So if the global crude oil prices rise, it feels almost immediate. Higher crude oil means higher petrol and higher prices of diesel. Pressure on inflation, higher transport and logistic costs, and stress on the government for the fuel subsidies. Experts believe that the crude oil could actually higher due to the crisis. But they also say that Venezuela's weak production capability limits the long-term damage. In simple terms, India may see a short-term pressure, not a long-term oil shock. Now let's talk about gold and silver, very important for India. Whenever there is geopolitical tension, Indian investors and the households turn to gold. It's emotional, cultural, and financial. Experts say gold and silver prices may rise due to the uncertainty triggered by US-Venezuela conflict. For Indians, this means gold becomes costlier for weddings and savings, silver prices rise, small investors for the industry, and the safe haven buying increases. However, this rise is driven more by the sentiment than the Indian-specific risks. India is not facing any direct economic threat from this conflict. So what about Indian stock market? Here's the key takeaway. Experts believe that Indian stock markets will remain stable as they were before. Why? Because India has no major exposure to Venezuela. No Indian companies are directly affected. No trade routes involving India are disrupted. However, rising oil prices can affect a certain sector. Oil market companies, aviation, logistics, transport stocks may face a mild pressure. But the long-term sentiment may stay low down for the session or two. But there's no exception to the crash or the panic selling. While India's economic fundamentals remain unchanged no matter what. And now here's the most important point. Well, this crisis is more psychological for Indians than structural. Markets react first, prices move on fear, but India's economy does not rely on Venezuela. In fact, experts say that India is much stronger positioned today to absorb the global shock than it was in the past. And due to the diversified oil sourcing, strong forex reserve, and the steady domestic demands, it's very much stable. So what's the final verdict for India? No direct impact, mild short-term pressure from oil and building prices, stable stock markets with selective sector impacts, and the US-Venezuela crisis is a reminder, not a warning. A reminder that global events can influence the prices, but they don't always damage India's economic core. That's the big question for Indians right now. Should India worry or simply watch or wait? Share your thoughts in the comments, and if this India-focused breakdown helped you to understand the real impact of US-Venezuela war, like this video, subscribe to TimesXP, stay informed. Thanks for watching.